Bună dimineața, good morning everybody. So we have an event in English this morning, a very, I know, hope-giving and significant event for Bucharest Stock Exchange. So yes, we get there this morning to celebrate, right, the listing of another ETF on Bucharest Stock Exchange, and this time we have an ETF tracking foreign markets, more specifically the main index of the Slovenian capital markets. And yes, First of all, yeah, we have to congratulate the issuers, our old friends from InterCapital Asset Management who made this event possible. And yes, thank you as well to all our guests from Slovenia present here today to tell us about their market and the opportunities on Ljubljana Stock Exchange. So yes, we have a fairly long and hopefully very exciting agenda for today. We hope that everybody will learn more about the region, about Slovenia, about the specifics of the Slovenian market, maybe the complementarity of Slovenia with Romania. And this being said, from my part in the introduction, I would like to welcome Adrian Tănase, our CEO, for his opening remarks.
Good morning. These are for the Remus, of course. Thank you, Remus, for the introduction. Good morning, everybody. So yes, I'm very honored to open this day, the trading day. And yes, I want also to congratulate InterCapital Asset Management for their consistency in proposing products for Romanian public. This is very good because in Romania Romania has become with a very strong buy side part, with a very strong investors community, both from individuals, institutional investors. So it's a stronger and stronger, and we have to produce products, and we have to propose products, competitive products for our public. And I'm very happy that InterCapital Asset Management, a very big asset manager, independent asset manager, has saw this potential, and they have acted, and it is completely in line with that, with our strategy, to develop the capital market. Because I think from now on the focus is to propose products, whatever they are, fixed income, open-end funds, ETFs, REITs, even REITs. We are working to regulate REITs in Romania. So ETFs, of course, like in this case, and because with no products you cannot have a big market, much more representative market. Another novelty part for today, for the listing of today, is that you have an international product, international, which is fully Slovenian product, and this is something new for the Romanian products, and I think it's something new in this region, because the cross-border trading in this region it's quite limited. The listing is very synchronized, is very well synchronized. Another, and we'll discuss today about this initiative with another initiative. We have signed a memorandum of understanding last year. We are 8 stock exchanges to identify some consolidation in this region, some consolidation initiatives. I really believe that there is a huge potential here in this region, and that this is far to be materialized. There are countries with smaller GDP, smaller population like this region, with much higher capital markets. So you have to realize that if you are working together, you can unlock this huge potential. And I think what we have done so far, it's a little part of what you can do in the future. So congratulations, InterCapital Asset Management, for seeing the potential. It's very, very well synchronized with what we are seeing as a development going forward in Romania, in the region. And I'm pretty sure that we'll be together successful in what we are doing. And now I want to invite Mr. Ivan Kurtovic, CEO of InterCapital Asset Management, our friend, to say a few words before the panels we have organized today. Ivan.
So thank you, Adrian. So distinguished guests, dear partners and dear friends, Almost a year after listing our Romanian ETF here in Bucharest, on Bucharest Stock Exchange, we are delighted to be here again with listing of our Slovenian ETF. Basically, since we introduced our Slovenian ETF, so it was end of 2020, the ETF had really tremendous performance of almost 210%. Before I dive a bit deeper into my speech, I would like to thank Adrian, but also the whole BVB team for providing us the whole hospitality here and to be a great host and partner here in Romania. In my speech last May, when we introduced Romanian ETF, basically I mentioned and I stated or I asked, why hold S&P when you can have or you can be invested into Romanian ETF? Today I can really confidently expand my statement to why to hold S&P when you can have both Romanian and Slovenian ETF. They are both listed on the local stock exchange now, so here in Bucharest, and they are all available through your local brokers. Our commitment to delivering innovative and attractive investment products on local exchanges remains strong. This is evident today also with listing of our Slovenian ETF, but even more with the plans to list some new products in months to come, of course, depending on regulatory approvals. The investment management industry as such is really undergoing a major shift towards both ETFs, so passive and low-cost strategies, but also digital apps are taking it fully over as a central stage for clients to invest. With that, I would like basically to share one exclusive news today that since yesterday, all of our ETFs, so all of ETFs that are listed on the Slovenian Stock Exchange are available to all the global public through Interactive Brokers app or platform. This is achievement not just for us as an ETF issuer, but also for all the markets, for all the market participants, because it enhances visibility, improves global accessibility, and ultimately boosts liquidity on the exchanges, what is really very, very important. We remain committed in promoting regional markets, and we really hope that basically the macroeconomic environment will support our region as well. For this, political stability is essential, as well as backing of all the stakeholders in the region. With this, I would like to basically thank one more time both Bucharest Stock Exchange, also Depozitarul Central, so I see Silvia there, but also colleagues from ISF, for being really true partners basically in our listing journey. As always, you know, this listing journey is not an easy one, but I mean, throughout those two processes so far, we really proved that it can be done. We really look forward to strengthening this collaboration and expanding it in the future because, as I said, we have really more plans and more listings to come over coming months. With this, I would like to conclude my opening remark, and I would like to invite my panelists, Attila, Adrian, and Marco, to join me here on the stage for a short panel about cross-listings and basically what stock exchanges can provide in order to enhance the liquidity and visibility. Thank you all. Good morning one more time. Thanks Attila, Marco and Adrian for having time basically to be here with us. So the idea is to touch shortly the regional capital markets and basically the role of cross-listing here. So before we start, let me just introduce everybody. So Marko is CEO of Ljubljana Stock Exchange, Attila is principal at EBRD, really advocating a lot for these cross listings, but also somehow united approach of the region and exchanges towards global public. And Adrian, you already heard. So Adrian is CEO of Bucharest Stock Exchange. So maybe Adrian, as a host, I start with you. So cross listing, and what does it mean for Romanian stock market and stock exchange?
Yeah, as I already said, yeah, the good news is that the domestic investors community is developing, and you have saw this in the last 5-10 years that you have a stronger and stronger domestic investors community. You have seen the Hidroelectrica deal. You have saw it in the. You are seeing it in the appetite for the government bonds listed on the stock exchange. You have seen it in. You are seeing it in any deal proposed to the Romanian public. Yeah? In this condition, I think you have to concentrate to propose competitive products to the Romanian public. It's very important now to have competitiveness and to have diversity in this offer. And yes, the cross trading might be a direction. We have to look at it. Yeah? Of course, this won't happen very fast. Yeah, because you have a cultural problem, yeah, because it's not only our Romanians, so the culture to invest in other countries, especially in this region, it's very limited. They are very limited, so Romanians rather prefer to invest in developed markets in US, yeah, it's the case in Croatia and Slovenia as well, in Hungary, I'm pretty sure, yeah. And you have to, of course, you have a region here, you have to unlock this cultural thing that you have to look in this region for our investments. Yeah? So it's not something which will happen very fast, this I'm pretty sure, but you have to, and in this context, this initiative initiated by EBRD, and yes, for which 8 stock exchanges are already enrolled by signing a memorandum of understanding, is very important. Yeah, you have to, and we are discussing some solutions to unlock this potential. Yeah, and if you want for this to happen fast, you have to be very, very synchronized. You have to be very coordinated in our effort, and this is another thing which will happen. It is not simple to happen, but of course the determination will. I'm pretty sure that will come in time and in the short time to make this happen. Yeah. So yes, the conclusion is that the potential is there, and I think the main barrier to pass is the one which is cultural barrier.
Thanks, Adrian. So Marko, going to you. So this is, at least as we know, the first listing of Slovenian fund that tracks Slovenian market, cross-board. So any thoughts that you could share with us on potential impact that it might have on the market and the economy?
Yeah, first of all, I see it as a great achievement, and I would like to congratulate InterCapital for listing the Slovenian ETF on the first market, or the second, depending how you treat Slovenia and Croatia. I think it's a win-win for not just for InterCapital, but also for Slovenian and Romanian capital market. For Slovenia, it brings increased market visibility for Romanian investors, which could bring new capital, new investors to the market, which probably or maybe didn't consider Slovenia as an option to invest. For Bucharest Stock Exchange, it adds to the offer for Romanian retail client, which is always positive, especially if this new offer brings diversification benefits, which is the case with Slovenian ETF. In terms of Bucharest Stock Exchange, I see also opportunity to increase their revenues. Already listing per se increases revenue, but also trading. For example, this ETF has relatively low size. 26 million euros approximately. But despite having such a small size, what is very interesting is that it's one of the most traded instrument in Croatia on the Zagreb Stock Exchange. In February, it was actually the second most traded instrument on Zagreb Stock Exchange. So when you have such a liquidity, it gives you the opportunity to also bring new, more sophisticated products to the market that enhance market depth, that bring potential hedging opportunities, thereby broadening the investor base. Last but not least, I would also say that this business strategy of InterCapital, of listing their products across the different regional markets, it's in a way you all mentioned capital market integration. It's already contributing by itself to the capital market integration.
Thanks. Maybe I will just, before I switch to another question, just to add or to comment what you have mentioned. So really since, so in Croatia, when we introduced our ETFs, basically ETFs as a products were non-existing. Now ETFs are almost 10% of overall volume trading on the stock exchange, and basically that really brings Zagreb Stock Exchange in line with some of the best-in-class European stock exchanges. Like in UK, it's approximately 15%, Italy it is a bit less, and all the other exchanges are plus minus on the same level. So we are really, how to say, proud on that. Of course, we do a lot on a local promotion, and we really hope that by listing and cross-listing those ETFs on some other markets like Ljubljana and here in Bucharest, that we can also, together with some other partners and issuers, we can help to increase the visibility of ETFs. Because ETF as a product as well, you know, it doesn't just bring the liquidity on the exchange with the ETFs, it also brings the liquidity from underlying instruments, because whenever you create or redeem actually the product, there, like ETF, you need to trade also the underlying shares. So thanks, Mark. This was just more like to complement what you have mentioned. So Attila, as EBRD, you are advocating really a lot for this regional capital market integration. So can you share some of the challenges, but also even more important opportunities that can come with this integration?
Yes, thank you, and thank you for inviting me. And always take the opportunity when I can advocate for the necessity of the integration. But first of all, there are 3 points I want to highlight. First is that integration, that's not a name. That's very important, that integration is a tool to achieve a much better capital market, local capital market. That's very important. That's still in the focus. And when I had a discussion with the CEO of the NASDAQ a couple of weeks ago, months ago, I asked him what was the major success factor for the Nordic markets, and he said that it's definitely the very strong, that it is built on the strong local ecosystems in Sweden, in Finland, in Denmark. That's the core. So we can achieve something only if we concentrate on that. But that leads to the second point, what I wanted to highlight, that it's very important that whatever we do on the integration, and that we'll need many compromise, of course, in many areas, but we need to keep in mind that what is the ultimate goal, and we need to keep the competitiveness of the local market on the top, and we need to improve that. It doesn't make sense if we integrate the markets in a way that, okay, there are more losers on some of the markets than winners. That's definitely not the way, because for the local market, we need the local ecosystem. For the local issuers, you need the local intermediaries, and the local investors as well. So that's very important. And the third point is that what integration can bring to this whole region is definitely the visibility. Because what we want to achieve is to show to the investors community and also to the issuers community that this 8 markets, 8 countries, is one region, one marketplace, where they can find the best option for investment option as an investor, or they can find the best capital pool if you are talking about an investor. And of course there's a very good example in the Baltic markets. What they did a couple of years ago, how they move together, and now that's a single region, the Baltic region. We are not talking about 3 different small countries, but it's a very simple region. And for example, the MSCI has a regional index now on these 3 markets, not standalone indices for the 3 countries. And meanwhile, before that step, those countries were not eligible for being, even for frontier markets in some cases. Now they are going for emerging market status. And if we translate it into this region, I think we can not talk about emerging market status, but even more, even developed market status, because that's one thing is for sure, in capital markets, size does matter. And that's the main problem with these markets. If we take a look at all these small markets, from infrastructure point of view, they are really developed. I cannot say that something is missing from the infrastructure in Slovenia or in Romania or any other countries. If you take a look at the regulatory burden, it's also there. So there's no problems. What we can work on, how we can increase the size of this whole community. And of course, there is a certain limit. The size of the country will determine what can be achieved on the capital market. So if we can combine these smaller markets together to be visible as one single region, then it will help, I think, the local communities as well.
Thanks, Attila. Maybe also to just to try to summarize what you have mentioned, basically the size, but also what I picked up, it was a point about intermediates. And asking me from the perspective of like issuer, I think like brokers are really essential in order to how to say promote the market with its research, but also road showing, and also the stock exchange has a role in that. And basically that leads me to another question, Adrian, for you. So basically as a Bucharest Stock Exchange, how do you how to say facilitate the cross listings, but also how do you think to attract even more potential cross listing to the Bucharest Stock Exchange?
Yeah. I have to recognize that you don't have such a strategy by itself, the dedicated strategy to attract international products. Yeah? Of course, for us, it's a positive development because I would say, but rather than a cross-border listing, it's board crossing competitiveness of the products. Yeah? So this I'm the most interested in, and because of course in your case you have a very certain very clear example. Yes, you have came with a very competitive product which has generated some reactions in the local market, yeah? And the industry, our local industry has become more competitive because of this competitiveness you have bring in the market. Yeah? This is what we are looking at, and I think this is the most important potential of this regional cooperation. Yeah? So I think this will come naturally as long as you are. You don't opposite on it. Yeah? As long as you are very open-minded to accept international products in your local community, and you understand the very positive effect on your local products. Yeah? Of course, everybody's interested, at least in Romania, the interest is to have a local ecosystem, a very strong local ecosystem, and to have local products in the market, to have Romanian companies listed in the market, to have Romanian open end funds listed in the market. Yeah? But this will come. I think this regional cooperation and this openness to cross-listing product will accelerate this trend, will accelerate the strengthening of the local ecosystem, as Attila said. Yeah? I'm very well convinced, and the past has shown that because you have already the Bucharest Stock Exchange has a 30 years history, yeah, modern history, has shown that this trend, acceleration, this development trend is not that didn't have the rhythm you want to have it, and I think this regional cooperation has this potential to accelerate everybody's development with their local interests. Yeah.
Thanks. That leads me also to one another question, actually, Marco, for you. So we've been following the foreign flow into the region, or I would rather say foreign outflow out of the region. So in my past life, I used to be a broker. I used to also facilitate a lot of those international flow into the region. And basically, whenever any type of crisis hit, there was significant outflow from the region. The last part was definitely in February 2022, when the war in Ukraine started. Obviously, with Hydro, you really succeeded to attract a really decent number of foreign institutional investors, but still, I think it is on a quite low level what it used to be like 2006, 2007, 2008. So how do you see the impact of foreign demand with this cross-listing, and what could this impact bring to the liquidity, but also to the prices on the stock exchange, in particular in the case of cross-listing of ETF to Ljubljana Stock Exchange and its issuers?
Well, first of all, I think that the first step is actually to create demand for investors to present what advantages this niche product brings, and marketing efforts, for example, like today's event, are actually crucial in educating investor, raising awareness, also building trust in those kind of products. And it's a good product because if we look, the spread is very tight on the product. For being a niche product, also has okay management fee. They're not too high. And also it's investing in companies that are good companies with proven track record, with good corporate governance, and it's a market by itself that's one of the best performing not just in the last year or last couple of years, but in the last decade. And despite being one of the most performing market in the last decade, I would say that in my humble opinion, based on dividend yields and PE ratio, it's still attractively valued. How much capital will be raised with this product, it's difficult to forecast, but all in all, I would say that actually in stock market, €1 that is invested, it's worth much more due to its known multiplication effect. Studies, for example, show that in frontier markets such as ours, every euro could be worth as much as €10. So for example, if in all the 3 countries where this ETF is listed, you raise you get inflows of approximately €100 million in the next 5 years, for example. This would increase the market cap of Slovenian stock market for about 1 billion, which is almost 10% of the current market cap. So all in all, that would be positive, yeah.
Thanks for sharing it. So Attila, that leads me also to one another question. So those cross-border activities are definitely something, that we need to cherish and even, to somehow encourage. So what type of policy or what initiatives on policy changes could you see that could be more like, game changer in order to even promote it further or to enhance it even more?
Yeah, of course, that's the major question what we are discussing with the stock exchanges right now. But that's clear that the integration is not a technical question. That's for sure. So we are not. That's very simple. I think the whole integration is more like how we define ourselves. That's the very first point. Whether we define ourselves as a region or still standalone markets. That's the first question. It's very challenging. It's really it's a huge challenge. The second is, although all these markets, most of these, 7 out of these 8 markets are EU countries, and the 8th is also actually has the EU regulations, North Macedonia, but still there are huge differences among these countries, how these single European rules are adopted, and what are the rules and procedures behind, how the regulatory authorities, how the supervision say understand and interpret all these rules, and that should be the second step, to have the same understanding on all these things and have the same procedure on these things, because that's I think the key to provide a level playing field for everybody. And also it also shows that it's not all about the stock exchanges who are ready to act as a single region, but also the countries. And that was also the key in the case of the Baltic markets. It was not about the stock exchanges. Of course, stock exchanges can be a kind of champion in this process, but it needs the cooperation from all other market stakeholders. And of course, that's the third one, that is closely related to the regulatory harmonization, that is also the post-trading question. And it's not a technical question. It's not about the willingness of the post-trading infrastructure, to what extent they are interconnected. It's all about the rules and procedure behind, what these rules and procedure led for these infrastructure operators. These are, I think, the main steps, and that's the clear goal is to make the trading, the cross-border trading inside the region as easy as possible, idealistically, to have a no cost, to have the trading at the same cost as on the local market for every single market participant. That's I think I would say the aim, and because in this case, this region will act as a single region, and this whole product actually, it's a very good example of what should be the final outcome already, because the stock exchanges and the post-trading infrastructure operators can only facilitate these structures. But at the end, the market participants should take the lead, and this example that the Croatian asset management company issues a Slovenian ETF on Bucharest Stock Exchange, that's the regional market, how it looks like. And again, just back to the Nordic markets and why I'm using the Nordic example, because Sweden is clearly the best example how capital market should be developed. It's a relatively small country, 10 million people in that country, much less than in Romania, and still their capital market is really, really huge. And what they have and what we don't have in this region is the regional investor base. Here in this region, almost nobody invests cross-border in the region. Many people are investing abroad, in America or in Western Europe, but not in the region. And that is very important in the Nordic markets.
I fully agree with that point, and also I've been there like on a couple of occasions. I even spoke with some local asset managers in Sweden, but also like from the, how to say, the Scandinavian region, and I would say it also goes a bit with the culture. So over there, people are somehow, they are willing to take care about their own future and the pension, and that's why, they are investing on their own into the stock market, because the stock market performance is the only, it's only performance that can really make you in the long run like wealthy. And basically, in the whole of our region, I think people got used to always to count on like state pension, but state pension, it's okay. So it's great if you have it, but you need to think on your own. And I think this is the bit of difference coming from this more approach that you want to take care of your own, rather than to count on government that will serve you with something. And maybe as we are entering like the last 5 minutes of our panel, so I would like maybe to ask the same question to all of you. So if you could implement just like one regulatory or structural change like on the market, what it would be and why, to enhance and to support the whole capital market in the region or country specific, but I would say it's more about the region. So maybe Adrian, we can start with you.
Yeah, I will close the regulatory gaps between the countries. Yeah, I want to have the same regulations, fiscal regulations, and because to have a competitiveness between a local broker and the foreign broker, they have to have the same playing field. Yeah, we are not afraid about competition. Yeah, because there is rooms for everybody. Yeah, actually have to renounce of this mindset that we are in competition each other. You are so small that. And you have to increase altogether, and there is room for all these markets to develop. Yeah, And another one is, yes, as Attila said, promoting this region. Because another, I don't know how it's in Croatia or in Slovenia or in Hungary, but in Romania, the investments from Europe, developed Europe, are very limited. Yeah? So yes, you want to have cross-border trading here, but you have to attract European investments here in this region, and there is not happening. Yes, it's more happening from US and UK. Yeah? So I think this is another potential, yeah, to be triggered. Yeah, there are a lot of money in France, in Netherlands, and they are not investing in this in Romania at least. Yeah, and I think this has a very big potential, and you have to work on it. Yeah, and we will be much more visible into regional approach. Yeah? I'm pretty sure about this, and this is another let's say argument to work on this, yeah, on this initiative together with the stock exchanges here.
Thank you. So Attila.
Maybe surprisingly, but for this question, I would not refer for something about the integration, but another important point, that's the accumulation of the long-term risk assets. Meaning, I would like to have maybe the same pension system in all this region as Sweden has. So, and what measures are needed to achieve that? That's of course a very that's a critical question, but I would like to see that like that, because that's the other point. Integration is, the fragmentation is an important problem in the region, but that's not the only one. I think this one is even bigger. But of course, the main problem with that it needs many decades to build a culture like that in the Scandinavian market. So it's not just about accumulation, but it's also a cultural question. If we have that in this region, we are okay.
Thank you.
Three panelists, three different answers. Huh?
That's the idea of the panel.
For me, the answer is really simple. It's post-trade harmonization. Every market has its own CSD, almost no links in between. Some of them also have their own CCPs. Harmonizing that, first of all, it would be aligned with capital market union idea, but also it would, as Adrian, I think, already mentioned, that it would decrease the cost, vastly increase flexibility and lower operational risk. But actually, to get those benefits, I completely agree with Attila that you need more capital. And in order to bring more capital, I think two things are needed in all our markets, and some of them you already have those things. It's investment saving accounts that come with huge tax benefits, tax incentives, and you need mandatory pension schemes.
Thanks. So a lot to do as a homework, but I believe throughout the panel we really succeeded to how to say, provide you with some of the topics or some of the challenges, but also opportunities that the regional market, all regional markets are faced with. But still, I would like to conclude with a positive remark. So there are definitely a lot of challenges, but also I would say that our example, what Attila has mentioned, Croatian asset manager listing Slovenian ETF to Romania, it's possible, it's doable. So definitely a lot of effort is needed. But I truly believe in competition and competitive processes, and I believe that by doing a lot of promotion, as a region towards Western Europe, but also abroad, we can really help, to promote the region and basically to secure inflow of new capital in the region. Thank you all for being the panelists. Thank you all for attending the event. And now I would like to head the stage to Givo to present us with the Slovenian ETF and the macroeconomical situation in Slovenia. So Gio, the floor is yours. Thank you, guys.
Hello everyone from my side as well. It's very nice to see you here. My name is Givo. I'm a fund manager with InterCapital Asset Management, and I take care of our ETFs, including the Slovenian one that we are listing in Romania today. I will try to be brief here, as you will have the opportunity to listen to actual issuers on the Ljubljana Stock Exchange, who I believe can present themselves much better than I can do it. I, however, wanted to show you some of the main similar and also different points between Romania and Slovenia today, and also give you a couple of important points for the ETF itself. If we look at Europe, the European Union and its countries, you are probably well aware of the general positioning of Romania there. Together with my country, unfortunately, we are closer to the bottom with the level of development. This is the GDP per capita. You can see here highlighted Romania and the average for the European Union. What is interesting here is that within the region we have a country that's actually nested between Spain and the Czech Republic, so we can say it's somewhere between the, let's call it, more developed and developing Europe. That's Slovenia, current GDP per capita of a bit more than 30,000 euros annually. To touch upon some of the main differences, I start here with the point, with the hope that you have a general overview of how Romania is standing, so I will focus on this. Slovenia, unlike Romania, is a relatively small country. If we look at the number of, at the population, it's roughly 2 million people. However, if we look at the GDP development, the expectations here, we can see that both Slovenia and Romania are similar in that regard. I must note that here I took the expectations from the latest research from the European Commission from their autumn forecast. It's a bit old. At this point, it was published in November. However, the exact numbers are not that important. What is important is the general trends that they show. And I believe that stands and will stand in this period as well. So unlike Romania, Slovenia is a country with a relatively low unemployment rate, even at the whole EU level. If we look at the general government balance, that's a big issue in Romania right now. You may know that some of the rating agencies have even highlighted this as a risk, potentially also leading to a decrease in Romanian rating. Slovenia has this very much under control. It's somewhat below the expected rate of inflation. Within the next couple of years, Slovenia starting at a higher point, but then deleveraging, and Romania starting at a lower point, but with the deficit actually increasing. These two countries will probably reach a similar debt to GDP ratio by 2026 or 2027. Looking at the current account balance, you can see that Slovenia is much more exports oriented, so they are at a surplus here. Romania is facing what we call a double deficit, so both fiscal and a current account. So in this regard, these are some of the main differences, I would say, in regards to the economy. As I said, you will have the opportunity to talk to actual companies here. When it comes to what's behind the economy, Romania has a number of very interesting companies, and most of them are incorporated in the main equity index. I believe maybe the exact name of the companies may be too small for all of you to see. That's not as important. What I would like you to focus on here is the sectors that are represented in the index. As you can see, the largest sector is pharmaceuticals. It's represented by Krka. I know some of you in Romania know of Krka as a brand. I hope none of you here use their products. Krka is a company that's relying on a big macro trend, a mega trend actually, and it's aging population both in Europe and most of the rest of the world as well. They focus on medicine that pretty much come with aging, so cardiovascular issues, blood pressure, and so on. The next big sector is energy. That's represented by a company called Petrol. They are focused on, most of their business comes from petrol stations, but they are also now shifting towards something that can also exploit another mega trend, and that's greenification. They are focusing on more green energy solutions, both for homes, cities, and so on. So from that point of view, also an interesting story. We have NLB as one of the larger banks in the broader region, and also a very good representative of what the index actually does in Slovenia. So unlike Romania, where you have an index with companies that do most of their business in Romania, so it's really very much a Romania-only story, I would say, if we look at BET. This is not fully the case with Slovenia. Most of these companies actually work within the region. Some of them even have most of their business abroad. So this is a good, I would say, proxy for the development of a somewhat broader region. I believe the representatives of NLB will have something to say on this point as well. The next two big components of the index are from the insurance sector. Again, Triglav Savare, you have Triglav here, you'll have the opportunity to talk to them. Another interesting story there as well. We have a couple of smaller issuers as well. I put them as other here, otherwise you wouldn't be able to see the different colors. But they do represent a lot of Slovenian, I would say so, industrial potential, their export orientation, and so on. With us today, we have Cinkarna Celje, another interesting story that can add something on what I've just said. If we look at the time when we started, when we actually introduced the ETF for the first time, that was November 2020, at that point of time, a lot of people were asking us, as they do always actually, what do you see in Slovenia? Do you really think there's a potential for that market? It was, as I say, 2020, that was after the first hit of the COVID crisis, so a lot of people were actually afraid that this might be an investment that's perhaps too risky, didn't see the potential, and so on. We were really positive about Slovenia, and as I guess you can see what this will show in the end. Starting from that point of view until today, if we look at MSCI emerging and frontier markets, they did a 15 and 30-something % return. Not bad, but compared to the other global markets, definitely not enough. We have Europe in general. Here I put both the MSCI Europe and DAX, which were somewhat better, but all of them were actually beat by the US markets. Both the S&P and NASDAQ had a great performance, almost 80% plus for the period. What was a very good performer was our broader region. So here you can see countries like Poland, Hungary, Croatia, and Greece, about 100%, so double from where we started. You probably know your home market beat all of these, so Romania was also fantastic, but the greatest star from the point when we started was really Slovenia. So I would say it was a very good point in time to start with this ETF, and we are happy that our investors were able to make money on it. This is how it looked for you day to day if you invested in Slovenia at that time. If you know what happened to Romania, it was almost completely different. So the first period was fantastic for Romania, even higher growth rates than here. Unfortunately, last year, especially the last half of last year in Romania was related with some political issues and so on, so we had a slight drop there. But you can see that Slovenia actually performed quite marvelously throughout this entire period. Of course, whenever we see such a huge growth, a normal question for everyone would be, is this too much? Is this a bubble? Are we seeing tulips again? The way we see it, no. If we look at what Slovenia did last year, so the index itself grew more than 40%, but the price to earnings ratio actually dropped, meaning that the earnings of the underlying companies grew even more. So what I have here for you is the current situation in terms of multiples. Firstly, price to earnings ratio, telling us how many euros we pay per each euro of earnings that the companies make in the index. You can see the left markets are obviously more expensive. On the extreme, we have the American market, NASDAQ especially, that's the IT sector. And then moving down, we have Western Europe, we have some of our regional markets, and at exactly 10% yesterday when I updated this, we had Slovenia, not percent, sorry, 10 times. Very closely, very close, almost, I would say, at par with Romania. Another interesting point that investors like to look at, especially retail, that's the dividends. As you can see here, again, both Slovenia and Romania are at the top here. Slovenia is currently yielding about 5%. Taking into account the way that this is calculated, so I'm using Bloomberg data, which look at the dividends paid in the last 12 months. I would actually expect most of the Slovenian companies to increase their dividends with the amazing results that they posted last year. So we'll see how this develops. But in any case, throughout the at least 10 years period, in average, Slovenia gave us 4 to 5% in dividends annually. To focus on the ETF itself, in the same period, so 2020 until today, we managed to accumulate 27 million euros, which was great news for us, obviously. But why we think this is an important stepstone is that at these sizes, this kind of ETF can also become interesting not only for retail but also for institutional clients. In many cases, they have limits of investing, let's say, no more than 10% of an ETF. At this size, this means 1 to 2 million euros, so a decent tick size. What most would be interested in, especially retail who don't have this kind of a size issue, I would say, is the actual return, which we've seen was amazing, but also noting that how good we can actually track the index itself. It's usually shown on a 12-month basis, so here you have the last 12 months for the SBITOP index and for our ETF. And you can see that the development is pretty much the same. You can barely notice the difference in the lines here. In the last 12 months, the full tracking difference, so the return of the ETF compared to the return of the index, was 1.1%. This is something that we intend to keep, so our total expense ratio is 1% annually. And to just wrap it up and give you a couple of important points. So the ticker that you can use to find our ETF on the Bucharest Stock Exchange is IC-SLO ETF. It's tracking the main Slovenian equity index. All the dividends that it receives are reinvested in the gross amount, so there is no tax deducted at that point. We charge an annual management fee of 0.6%, taking into account all the other expenses, so trading and everything else that's related to an ETF. We expect about 1% annually in total expense ratio, so this would also be the expected difference between the return of the index and the ETF itself. And that's all from me today. I wish you all a very nice day, and I hope you enjoy the event and enjoy the ETF as well. Thank you.
Thank you very much for the presentation. Very, very interesting, and yes, new food for thought for our investors in Romania. So we have one more panel, and yeah, again, a very, very exciting one. So actually, we have with us today representatives of 3 major Slovenian companies, part of the main index. So I would like to invite on the stage, or next to the stage, Mr. Peter Jancic, Deputy General Manager, Investor Relations at NLB Bank, Mr. Uroš Ivans, CFO Triglav Insurance, and Mr. Filip Kozelnik, CFO Cincarna Ciele, and the panel will be moderated by Krešo Vukrinčić, Chief Investment Officer at InterCapital.
Thank you all for joining the panel. I think it's going to be very useful to kind of share a bit more the story behind the index and the ETF that we are listing today. Remus already announced, but maybe just to say one sentence about the companies. So Uroš here is representing the Triglav Insurance, one of the leading insurance companies in the southeastern European region. Peter is representing NLB Bank, also one of the biggest banks in the region, and Filip is a board member at Cincarna Celje, who is, I would say, a global titanium dioxide manufacturer. So thanks again for sharing the stage. And as basically the ETF has been listed now in Romania, I would say that still many Romanian investors are not that familiar with the companies included in the index. So basically, what would be your main argument on why they should take a closer look at your companies and the Slovenian economy in general? Maybe we can start with you, Uroš.
It's okay? Yeah, perfect. Thanks again. Thank you to the host for having us here. Thanks InterCapital for this opportunity. So yeah, we are a Slovenian-based company, but we're really regional, as Givo pointed out earlier. So what we bring to the table is a really strong regional footprint with more and more diversification outside of the region, strong capitalization and profitability. We give back to investors about half of annual profits through dividends, and we, as I said, diversify more and more. So in brief, we are a universal insurance player. So we pretty much do all insurance lines in non-life, life, health, pensions. Our size is about 1.6 billion gross written premium last year, 20% outside of the region actually, throughout European Union in direct insurance and reinsurance globally. 60% is still within Slovenia, and 20 percentage points we do outside Slovenia in the region. So around 80% is done currently in the region. We have a credit rating from both S&P and AM Best, which is very important in our business, especially in our global and European-wide presence with a currently positive outlook. Last year we did 40% 1.4 ROE. And we plan to double the profits in the next 5 years with a bit less than doubling our volumes. We're also in asset management, so we do around 6 billion of assets under management currently in insurance assets, pensions, but also third-party asset management. As I said, we're also giving back a lot, so our dividend yield has been closer to what was presented earlier. And for the future, again, we pretty much plan to pay out around $500 million of dividends in the next 5 years. So that's in a nutshell. Yes.
Thank you.
Really glad to be here in Romania. As Krešo introduced me, I'm from Țincarna-Țeală. Țincarna-Țeală has a really misleading name because we have nothing to do with zinc anymore. Our story started 150 years ago with zinc smelting. This was our main business till the 1973. Then we started producing titanium dioxide. Titanium dioxide is a white pigment that has no substitute, not in the near term and not in the long term. And it's basically used in everyday stuff like toothpaste, sunscreen, cosmetics, paints, coatings, large variety of different products. We have around 1% of global demand. We plan to increase this by debottlenecking our operations. And I have to point out that we are constantly beating our competitors in relative benchmarks. These are large multinational companies. We export 90% of what we produce, also to Romania. We have several other business units, but I won't deep dive onto that. We also sell fertilizers for ecological farming. We have a business unit that caters to local, regional pharmaceutical and chemistry industry. We also are vertically integrated into downstream products like plastics and powder coats. So that summarizes Țincarna. I also would like to add some numbers. We have 700 employees. We plan to right-size organization so we become more lean in the next following years. We achieved last year 200 million in revenues and 23 million in net profit. So we were quite profitable, and we also beat our own estimate at the end of the year. So this would be from my end a short introduction to Țincarna.
Thank you. Peter.
Yeah, thank you. It's a pleasure being here, and thank you for the interest. I represent here the NLB, so it's the Slovenian-based bank, and we are here, of course, to pitch ETF on the Slovenian Stock Exchange, and ETF is as attractive as the constituents are, and that is the reason why we are here. And you heard from Uroš and also some of the other companies which are on Slovenian Stock Exchange. We are in essence, due to the fact that we come from a country with 2 million population, we are forced, or we see necessity to expand beyond the borders. So as Triglav, also the NLB is in essence systemically important bank in practically the former Yugoslavian countries. So those are the markets where we are having above 10% market share practically on all markets in Slovenia, domestic market, with more than 30% market share in the banking segment, but also leading in the asset management industry now after the acquisition, also in leasing, in bank assurance products and so on. So the markets where we as the bank operate are of course Slovenia domestic market, with the acquisition of Summit Leasing from Apollo, also returning to Croatian market, both two Bosnian entities, Serbia, Kosovo and Montenegro and Northern Macedonia. So those are the former Yugoslavian countries. We would like to expand further, and we'll get to that, expand further with let's say, smart bolt-on acquisitions in universal financial services. So not just banking, but also some ancillary products, such as was the case with leasing, with asset management, where we bought in Northern Macedonia the outlet from Generali and so forth. So being the universal financial provider in the home region, and at the same time having a really strong focus on the governance, because in the region where we come from, governance is extremely important. We are now expanding our management board with a 7th member. Out of that, we have the Slovenian one is the CEO. Then we have now 2 German, 1 Austrian, and 1 Northern Macedonian board member. So it's the international management board. We are supervised by the ECB plus the Bank of Slovenia. So the governance is extremely important, and of course the communication or the interaction that we have with the shareholders.
Thank you. Let's step back a bit and touch on the macro side and how the macro environment impacts your business. And to start with the financial sector, which is obviously impacted by the level of the interest rates and the cycle of the central banks, most notably ECB. In your case, in terms of insurance, it obviously impacts a lot on your investment portfolio and with the banks on your margins. So maybe just briefly on how are you acting as a business in this current environment, and what's your outlook going forward? Maybe we can start with Uroš.
Yes, thanks for the question. Basically, yes, we are very much a macro-driven business. Of course, especially having such a big footprint in the economy, but also, of course, the global capital markets through our investments, through our balance sheet, but also they influence, of course, the insurance underwriting cycle and after all the insurance products. Currently, our view is despite all the uncertainties and the basically dovish kind of direction of central banks, is not that gloomy. That is because our investments are much more skewed towards the longer part of the yield curve, where we don't see and expect such movements in mid to short term. The yield curve is actually steepening, of course, by lowering the shorter term. And I have to say that there are, you all know financial institutions, but nevertheless, the movement itself does not influence us a lot, because we are pretty much as perfect as you can be matched at any point of time. We a certain point decided that we are not assuming the interest rate risk as a business. We have so many other sources of risk because we are in the risk management business itself. Of course, in the longer term, the level of interest rates do influence our income, but as I said, we don't see any dark pictures on the horizon yet at this point of time. Quite contrary, we still haven't reinvested everything from those deflationary periods. So our investment income is still rising from quarter to quarter. In the economy itself, there has been a lot of uncertainty, basically, in recent times, but we're still doing okay. We still see growing demand in the region. And so far, we have not changed our expectations.
Okay, your take on it, Peter?
Yeah, maybe just to step back a bit from the question. The asset structure of the NLB currently around 50% in Slovenia, so that's the impacted by where the ECB sets the key rate. The 20+% is in Serbia, where we have a Serbian central bank. Then the others which follow are Northern Macedonia, which again central bank reacted, of course, to inflation and now is slowly cutting rates. Practically all the other markets, such as Kosovo, such as both Bosnia and Montenegro, they have not moved when there was high inflation. So the interest rates are at around zero. So those are the assets which are now not interest rate sensitive. At the same time, what we have done, when inflation appeared first, we were practically completely unhedged, and we saw more than, let's say, 200 million euro of increase in net interest income on the back of higher rates. As rates peaked and now started to gradually decline, we of course took several measures to mitigate that impact, and that's of course the extending of duration of the securities book. We hedged some of the liabilities, so we did interest rate swaps. We have practically all the new production on the mortgage segment and also on the consumer lending segment, which comes with fixed interest rates, and that's fixed for life. So in Slovenia, when you take out a mortgage, 20-year mortgage, it's fixed for life. So just yesterday, I heard for a client here from Romanian banks at 5 years, and she mentioned the rate at around 6%, something like that. In Slovenia, those rates are substantially lower, currently at 3% or even lower. So we see this as the anchor product. But what is beneficial for us is, of course, the fixed rate production, because in essence it takes away the net interest income sensitivity. And we have successfully lowered the NII sensitivity from more than 100 million euro for the parallel shift for 100 bips to less than 70 million euro. So it is having potentially an impact on us, but at the same time there are certain measures which we are doing. At the same time, it's for us, that's the second side of the coin, which is with lower rates there is much more demand for loans. And we see last year we grew in essence on group level 12% organically, including also the acquisition of Summit Leasing. We had almost 20% organic plus inorganic loan growth.
You've outlined how the environment was positive, let's say, for profit generation for NLB, and also NLB is a company known for relatively high dividends. Can you just elaborate in a couple of sentences on how do you basically make the capital allocation decisions in terms of dividend payments versus investing in growth in an environment that is supportive for growth?
Yeah, maybe not sure how much you know about this. We, as Triglav, we set for 2025 dividend payments 50% payout ratio. That leads to slightly more than 9% dividend yield for 2025 on the current price. We of course try to find the balancing act always between the capital return to shareholders, at the same time not compromising on any capital requirements, and having of course the capacity to grow organically. We are 25% plus one share owned by Republic of Slovenia, which is a normal shareholding without any special right. For us, that limits our capacity or capability to buy back shares or to issue shares, because we would need, let's say, strategic dialogue with the government, with politicians, which you probably can imagine it's not the most easy to achieve. So we rely on the capital markets activity. In the past, we have issued senior preferred bonds. That's the consequence of the MREL, but also Tier 2 instruments, and we have a smaller 81 instrument. So that's the capital instrument where EBRD was practically the key underwriter of that bond. So when it comes to us, the balancing act is, of course, organic capital generation. At the same time, relying on wholesale funding or capital issuances in terms of notes, bonds, and so on. And at the same time returning capital. And at the moment we have 4 billion RWA capacity to acquire something. This is something, let's say, we keep it on the side, that we have possibility to acquire. Last year, in the second half of the year, we went out with a public takeover offer for Addiko Bank. Addiko Bank is not present in Romania, but it's an Austrian bank which has branches or subsidiaries practically overlapping many of our footprints across the region. So it would be seen as the strategic fit for us, and that would, in essence, consume those 4 billion RWA capacity.
Thank you. Just to stay with the financial sector before we move to the industrial one, basically the insurance sector, I'm just gonna put out there two buzzwords related to the insurance sector. One is digitalization. It's not just related to the insurance sector, but I hear it a lot there, and also climate-related risks. So how do you see Triglav positioning in those two aspects, and where do you see opportunities and challenges, having said that?
Yeah, that's actually right to the point. You know, not just buzzwords, but actually something that's I think on our agendas daily, not just Triglav's, but I think the industry-wide agenda through all. It does hit differently, especially digitalization, as to some other financial institutions, especially banks and asset management industry, it's not so much about digitalization of your processes, your back end, your efficiency, where we have differences. And this is very much our focus, of course. It's the client touch points where we do have differences. And that is simply the case because the frequency of the client touch points are much less frequent in the insurance industry than there are in banks or asset management, simply because how often people have the need or go shopping for insurance compared to how frequently they check, you know, their current accounts or whatever within mobile apps or something like that. Having said that, we still do invest in, and we have, you know, piloting around on how to increase the engagement with clients. We now see that it does make sense to focus more on where clients actually need us more than we need them when we chase them, and that's of course when there's a fortunate events of claims, an example. So the claims handling process is being digitalized very rapidly, and you know, the advantages are there. So the solutions that are introduced wherever within our group are quickly then basically roll out through the group. We do invest also in sales, of course, but in direct sales, as I said, we struggle with engagement. Whereas in, you know, what is very popular and going to buzzwords of you know, aggregators and stuff, there are no clear advantages actually for the industry, because what you actually swap is just one distribution costs for another. We can even argue that sometimes those digital solutions are costlier for insurance players than the old incumbent tied agents, an example, simply because the marketing costs and the distribution fees are so high in the aggregator platforms. So having said that, yes, digitalization is a top of our agenda. We see clear advantages of it, not maybe on so obvious points than in some other financial institutions world, but it's happening quick. Few sentences on climate change. I would say that the main facts there are, you know, it's happening, it's causing new risks, it creates new opportunities, definitely because there is a growing demand of protection needs from our clients. For some of them we have the solutions, for some of them We are developing solutions. For some of them, we are still struggling as an industry on how exactly to address them, because we feel the responsibility to act either alone or together with maybe some private government partnerships, but definitely it is there.
Thank you. Philip, for the industrial sector, I would say a different set of challenges. Some of them the same, but also some different in terms of supply chain disruptions, energy costs, trade barriers. We've seen recently the US announce new measures in terms of tariffs targeting also European companies. So how do these uncertainties play out on your business model, and how can you kind of position yourself in order to compete?
Yeah, to understand the current situation, we have to go back to Trump's first administration. Trump, in his first term, announced tariffs on Chinese titanium dioxide. This affected us because in the following 2 years, the demand for local construction in China fell, and also the liquidation of their biggest developer. A lot of Chinese material came to Europe. We had to fight this with an ad hoc coalition of titanium dioxide producers who put forward to the European Commission a proposal for tariffs. These were implemented in the middle of the previous year as temporary tariffs, and beginning of this year, the tariffs are permanent for the next 5 years. So we managed to somehow limit the Chinese material flowing into Europe because at the highest point the price difference was around 1,000 euros per ton. It's a quite significant difference. So this is the current situation. We do not sell a significant portion of our pigment to USA. We have our strategic directive that we should increase sales there to 10%. Currently, we don't have any information if the tariffs will be put on titanium dioxide. So it makes us competitive on their market. But I see the measures that Trump and the European Union would put on the USA as more indirect effect, because higher prices would translate to lower disposable income for European consumers, which would in turn relate for lower demand for titanium dioxide. So this would be like the macroeconomic situation. But yeah, if I go back to the macroeconomics, titanium dioxide is like a predictive KPI for like the development of a country and like how the economics will move forward. So if the demand increases, the GDP will also increase. So it's really correlated one-to-one. So shortly from my side.
Okay. So what does it show now?
I would not say.
Okay.
You are the fund manager, so you have to figure out.
Let's zoom out a bit. So how can the Slovenian industry basically remain competitive in an environment like you outlined, and also if we incorporate the risks in terms of energy availability and also environmental regulations? And do you see now with Trump kind of setting a different stage, at least in the US, do you think that Europe could follow as well in that regard, and might we see some different winds blowing?
Yeah, for the energy part, it makes European industry really not competitive. If we compare it to US and China, we saw that in 2022 with the energy crisis. Luckily, Cincarna has a really good hedging strategy when it comes to energy prices. So previously we invested in solar panels, so we now have 10% covered by our own electricity. We have many close positions on energy and, electricity and natural gas. We leave something on spot so we can speculate. We also plan to invest in a steam turbine which would cover up to 20% of our electricity needs, so that would put us in a really favorable position cost-wise and energy-wise. I just heard news that a plant that is bigger than Cincarna and is in Netherlands is closing. So that would mean that Cincarna could potentially have a larger market at hand. We also saw in 2022 when energy prices were increasing and our direct competitors who did not have such good hedging strategy when it comes to electricity, they had to shut down 2 plants, and it makes a demand for Cincarna's titanium dioxide. When you combine this with anti-dumping measures and plants closing down in Europe due to lower profitability, it makes us really profitable and desirable as a supplier. So yeah, Trump has some wins, but I think we can manage that, so we can stay and become more profitable in the following years.
Thank you. We discussed some of the macro challenges. I would maybe try to focus the discussion now on how your companies fit the regional or even the global markets, and what kind of similarities and differences do you see. So basically, I mean, the banking and the insurance sectors in Slovenia are definitely stable, as you already heard, and have decent profit generation capabilities. But what would be the key differences in the business models compared to Western financial institutions? And maybe even if you want, you could compare it to Romania. So yeah, maybe Uroš, you can share your opinion.
I mean, in our industries, there's of course huge similarities, because we do have very similar regulation. It was pointed out earlier in the earlier panel, which is implemented a bit differently. Of course, even in non-EU countries in the region, they do follow the European lead there, but you know, the implementation is then always a bit different. But the biggest difference between regional markets, and maybe one more point earlier, when we talk about regional markets, we are close, we are similar in culture, and so on, but we are very different still, unfortunately, or fortunately, in for the opportunities that creates in terms of economic development and the penetration of our services, especially insurance industry. So when comparing our markets and our businesses with Western Europe, I would say we have some of that in the region, in our 2 most developed markets where we are present, in Croatia and Slovenia. So the markets, the penetrations are pretty high. The demand is natural, so it's not so much supply push and obligatory insurance lines that are present. And we have the other part, which is growing much faster, but the penetration is really low. An example, just the difference between Slovenia and Romania is about 4 times in terms of penetration, so insurance premium in GDP. The offering is always there. Now markets are global, so you can basically get the offer for whatever you want. It's just that the demand and the affordability is what makes the difference. And this is basically our role here. And of course, the size is also very important. Now, size in our business is always kind of a factor that of course influences positively your business simply because of the economies of scale. So you would argue that, you know, bigger markets, bigger opportunities, bigger size. But in some cases it also acts a bit, especially in the regulated businesses like ours, as a barrier to entry. You know, especially on small markets like Slovenian, where you have only 2 million people, different language. So, you know, bigger corporations think twice when entering the insurance market the old way, of course, before, you know, dealing with the regulation, translating everything, accommodating to, you know, all the details in tax and bureaucracy and so on and so forth. That's the situation. Of course, you cannot sleep on it, but I would say those are the main differences. Otherwise, we are basically on a global market with you know some smaller differences.
Peter, with respect to banking, I mean, in, let's say, in NLB's example, I mean, you've managed to achieve just as just one KPI higher ROEs than in recent history than, let's say, Western European banks. On the other hand, our guests here are aware that, for example, Romanian banks have had very strong profitability figures in recent years. Can you just contrast what the causes of that and any other changes in terms of the business model and the environment?
Yeah, I would definitely not want to claim to be an expert on Romanian banking sector. So I have just a couple of numbers in my head. We of course benchmark ourselves to some of the banks which are listed on your stock exchange, but. Our geographies where we are now present have approximately 18 million population. So the addressable market is similar to the addressable market that let's say the domestic players in Romania address. There's an important difference. Being present only on one market is much easier in terms of group steering, in terms of regulation, in terms of practically everything. That's the reason, so flipping to the other side, why we often say there's value in imperfection. The value that we see in the markets where we operate, which are smaller markets, Montenegro with 1 million population, Slovenia with 2 million population, and so on. What's the value there? There's very limited attention from global banking players. Here in Romania, you have Societe Generale, you have BNP, you have practically all the important, you have Garanti, BBVA, and so on and so on. So not to mention, in geographies where we are present, we have so-called Central Eastern European regional banks. That's UniCredit, Erste, Intesa, Raiffeisen, Addiko I mentioned, and OTP, which sold Romania. So that's the difference. There's practically no French, no German bank, no UK bank, no international banking group, and we are, as Uros said, we know the region much better. We used to live in the same country. We practically speak the same language. When yesterday, Krešo, you said, if you speak in Slovene, I will understand, and we then speak in, let's say, we say Balkan Esperanto. So we mix all sorts of, let's say, words and languages from Croatia and Serbia and so on. So that's the difference. For us as the banking group in the Balkans, this is the main show. For Intesa, which is, let's say, consolidating here and there, and they would like to see size of 100 million euro profit on each market. Achieving 100 million euro of profit in Bosnia, you can just write it off. This is not happening. But for us, every contribution is important. And we get more than 50% of contribution from countries which are not Slovenia. So it's the oversight, the focus, the attention from the management and then from everyone else to these markets. It's completely different than it is for some other banking group. So that's the difference, and this is the value in imperfection. At the same time, when I did this, let's say, brief analysis of the performance of the Romanian banking sector, I was surprised that cost-to-income ratios, which should be, or let's say, on single market position substantially lower, are, let's say, at par as we are. where we are. So we are at 43, the last published, or let's say 45 cost to income ratio. Our, let's say, cost of risk is lower than it is for the Romanian banking sector, and so on. So the differences in profitability, which should materialize with, let's say, Romanian banks having 20% plus ROEs, we are let's say, we scratch the surface of that. We are guiding for sustainable more than 15% ROE going forward, let's say, in the mid period. So we have some advantages, and that's higher net interest margins. So let's say the nominal yields for consumer lending in Serbia are at, I don't know, 15%, plus minus 3 percentage points, and so on. So the net interest income is juicier than the banks that we compare to, such as Erste, Raiffeisen, Unicredit, Intesa. So those are our national peers, and we do a lot of things substantially better. We have size, we have understanding of the culture, and we have product. And just let's say brief touch point, I saw you have Revolut as a bank here in Romania. In Slovenia, we of course have Revolut capabilities, but that's something that we are still able to match the whole experience of the client. For the transaction-wise, probably not there yet, but at the same time investing a lot into digital, as Uroš mentioned. That's the name of the game, which probably all the banks around the world and in this part of the world as well are focused on.
Thank you. You know that Slavic Esperanto is actually a thing. Gio can speak more about it. Filip, Cincarna exports most of its production. What are your key export markets, and is Romania one of them? And do you see potential in expanding Romania as a market?
Yeah, thank you for the question. I have to say that I'm positively surprised by the potential that Romania has to offer. I have to say that a lot of what I know of Romania is from internet memes, so this is diametrically different from what I saw. And it's also my first time here in Romania, so yeah, it's a nice visit, and I hope that I will come more. As for the exports, Cincarna exports 90%. The majority is like 27 or something is to Germany. It's our biggest market, but we see a steady decline in the German market, and also, as you may know, the auto industry declining in Germany. So we try to focus on other countries. I looked at our sales data, and I saw that we have significantly increased our sales to Romania, which is really nice. So comparing 2024 to 2023, we doubled our sales to Romania. So it's becoming more and more increasingly potential for Cincarna. And if I compare the numbers for more years back, we have fivefold our sales here in Romania. The majority I saw comes from German companies that have factories here in Romania, like DAV, Baumit, Brenntag. But I also saw, I think it's a Romanian owned company, Hasit or Hamit or something like that. So yeah, definitely speaking from the numbers and what I saw here in Bucharest, I see a lot of potential for Cincarna expanding our sales and also our presence here in Romania. So yeah, really happy to be here, and I'm so happy that I was positively surprised by Romania and the people and also the city. So thank you for having me here.
Sounds like you will have more and more opportunity to come to Bucharest if the business in Romania keeps growing.
I hope that InterCapital makes more ETFs and lists them on the Romanian stock exchange.
Absolutely.
So I have more excuses to come here.
Absolutely. To conclude, one last question for all of you. If you had to highlight one strategic priority for your company over the next 3 years, what would it be? Maybe. Uroš.
our biggest priority currently is definitely further diversification. We have, as I said, we have a strong footprint. Sorry, in the region. By the way, it is around 20% market share currently. But seeing big opportunities still there. The region is becoming tight for us, also simply because we want to diversify our cash flows that we generate. Also, let's say more. So we are actively looking on how to do that, and that's probably top one currently that we're dealing with.
I would point out two things. Increasing in energy independence, as I mentioned, building our steam turbine to cover 20% of our electricity needs, so we can further expand on our cost advantage. And the second thing would be to invest in our production so that we can make more value-added products, because currently the majority of our pigment types are commodity types, which are quickly interchangeable at the market. So our strategic directive would be that we move forward to more value-added pigments so that we can differentiate from the Chinese competition.
Honestly, I struggle with such a question, because in May we published the 2030 strategy, and among the KPIs or targets which are mentioned there are, I would not lie probably if I say 20 different metrics. So from the net promoter score to capital ratios to the balance sheet size to profitability to ROE to I don't know what. You have practically every banking indicator which you can come up, we guided. But I think the overarching ambition is, because in the banking size really matters for us, it is to grow. And to grow organically and potentially also inorganically with smart M&A on the existing markets, potentially expanding with banking operations to Croatia should the opportunity arise, and potentially also Albania. Those are the two markets where we would like to be present, and we see strategic fit. So the ambition is in essence to double the balance sheet, to double revenues, and to double profit by 2030.
Thank you very much for joining the panel. Hopefully we managed to paint a picture of a growing market that's still affordable in terms of valuation, and for any other additional clarifications, the companies are here, and now I think we are ready to ring the bell.
Please, the InterCapital team, our Slovenian guest, Adrian, join us on the stage for the noisy part of the event. Okay, thank you very much. Have a nice day.